Hello traders, this is Wave Trading Education Part 4. If you have not watched Part 1 to Part 3, we recommend that you watch them first before watching this Part 4. Each video is unique, and we are discussing different aspects of wave trading strategies that traders must know. This is a free educational material. Traders can share it on YouTube, on Facebook, and also on Twitter. All right, we appreciate your interaction, your comment and everything regarding this video to help us improve our YouTube videos. Let's get started. Wave trading education part 4. So in a previous video we were discussing how we handle our trading decision, how we trade around a 50% and a 61.8% retracement when the multi-wave is completed and the correction is underway. We don't want to make mistake. We don't want to give back all our profit being too aggressive. That's what we are discussing. And also we talk about the smart media line, how we can use the smart media line to make excellent decisions. And the blue horizontal line was representing what we call the smart media line SML. Okay. So at this point in time, 2011, let's go now to the monthly chart. Few things we can do. When we switch time frame, going to the lower time frame, we are trying, we are trying to zoom into the price. So you can see we are now on a monthly chart for the same stock that I'm using for this educational video, Physia. Okay, it's a draw company. So you can see that on the monthly chart, you see here, the price went above the smart media line, which is the blue line here, but did not find a support. In fact, if you pay attention to the blue trend line, break above the blue trend line and retest the blue trend line. This is a low risk entry point. This is a beautiful bullish setup. Can you believe that on a monthly chart? Look, easy. You just break it. Now, by the way, the price was in a declining chart. Look, let's pay attention to the price itself. This is what I always say to traders. Keeping trading simple, all right? Removing all the blah, 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 all right? So the price in a downtrend, the price might display lower lows and lower high until the price failed to display a new lower low. Right here, the price failed to display a new lower low. At this point, this low, I remove my spotlight so you can see this low compared to this low is a bit higher. But you need to be careful. It will become perfectly bullish if this resistance here is broken, which I like to call the nuts. Though the price display a higher low here, the nut must be broken first to confirm that the bulls are truly in control. But look again, using that definition alone can put you into trouble, because if you are too aggressive here, you can get into trouble. Look here, there was a higher low here at this point in time. All right, this is a common swing trading mistake. In fact, the biggest swing trading mistake, because the biggest swing trading mistake is the violation of a market pattern. Though the price was displaying a higher low, it was inside a bearish territory. You see, the declining channel, we were still in a declining channel. Avoid this mistake all the time, avoid it. So, though there was a higher low, the higher low was within, the bearish channel. It's about market pattern, not price pattern. As an Elliott wave trader, you are always, because the wave principle is giving us patterns. You want to use the pattern, align the Elliott wave patterns, align the Elliott wave strategies with the market patterns. This is, if you watch our video, you traders will notice that I say this all the time, and some traders understood what we are talking about. And I've seen it. All right, very important. All right, that's what I'm talking about like this. All right. So this was a better place. Break above retest. Well, so here you will see that it went above the smart media line. I will be careful here, because what the price did, it break above, the bearish channel. It's better to be patient. Sometimes they will go without you. It saves you a lot of money, even if you miss the opportunity. Here, look, beautiful. This is a low risk entry point. What professional will do here, I will show you. As the price was touching that level, they will draw a line there and they will enter the trade carefully, talking about risk control, and they will put their stop loss below this low here. Some traders with deep pocket will place it below the lowest low, which is this one here. They will place their stop loss right here. All right, let's continue with this video about wave trading education part 4. So you see now, so from the yearly chart we go to the monthly chart now, and we see things differently, and we want to enter the trade. So if you miss this opportunity when it was retesting here and return back above this median line, the price must go above this high here. Are you following me, or am I talking to myself? There's a high here, so it retests it at this level here. Pay attention, look carefully. I want to draw a line there so you can see that high here, this one here. I have too many lines. My apology to traders right now. Look, pay attention to that line. Color it again. I color that one into red. And this is more practical part of trading. You see. All right. You see, price went above it and try to retest it. All right. And then when you see, try to come back again. Second time, people were buying here. All right. These are very conservative traders. They bought it above this median line, but also above this high here. All right. And now it's working perfectly. It was a bit slow, but it went up now. Okay. Let's go back to wave trading. All right. I'm going back again to the yearly chart. Okay, now going to zoom into it so we can see everything on our chart. All right, so traders, we discuss how we handle the 50% retracement here. All right, we are expecting a new cycle, but as I was telling you, traders that understand the flat correction, which is a crazy correction, a lot of ordinary traders think that after the motive wave, the price pulled back to 61.8% in the zone of 50%, 61.8%. A new cycle will begin straight away. Sometimes they get into trouble because of the flat correction. The next thing that I'm going to discuss in this video is the flat correction. There are various types of flat correction. All right, and you can go to YouTube /2480 and to learn about the flat correction. Sometimes what we see, pay attention. This is very important because professionals are watching it. You remember I said that the professional are watching a level of 138%, somewhere up here, 138%. Do not forget that. We said that. That's why we said you watch the previous video. As the price hit this zone of 50% and 61.8 retracement of the multi-wave, sometimes the price will go and exceed the high of the multi-wave and go straight away to the 138%. People will think that a new cycle has begun, but no, it's not a new cycle. This move from here to here, we will call it the A corrective wave, and the move from here above the high of the multi-wave, we will call it a B corrective wave. And then suddenly, something strange usually happens, all right? The price will count down big time, all right? Boom, 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 boom. Sometimes it may not go below the low of what we call the A corrective wave. If it doesn't go below the low of the A corrective wave, we will call it what we call a running flat correction. But sometimes, which I love myself, the price will go back down completely to cancel completely the whole motive wave. So first move down. Okay, let's remove some lines so trader can see it. All right, are you following me? Stay with us. So motive wave up to this level. All right, traders quickly draw the 50% and 61.8. They are watching it because they know that there's a high channel primary change direction here, provided that the fundamentals are solid. Okay, as we have discussed already, we don't want to repeat ourselves. Scenario may happen at this price may go pull back, so we will call the move. You want to know Do you use Google Map? This is about navigation. You are using the area wave. You want to know what the price is likely to do, talking about high probability set out, but you don't want to force it, but you are aware of it. That's all. So in the zone of 138%, it's my 138% roughly, all right? So professionals say come down. If you find a support, they will be watching the 138%, forming a big correction. Sometimes a new cycle completely will start from here. Boom, 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 boom. Displaying another 5 wave exceeding the 138%. Price can go to 261%. So a new cycle may begin straight away here. Price goes straight away to 261% Fibonacci level. These are a dynamically bullish stocks. It can be also the macroeconomic condition was so favorable, and the market itself is bullish. The global economic conditions are very, very sound, and you will see, the companies, a strong company dominating their sector, talking about monopoly, and you will see straight away they probably change direction here. That's why some traders always buy here, and will go all the way, exceed even the length of the multi-way, and go to 261. The bullish stroke, the strong bullish stroke, will go even to 314 Fibonacci extension level. 314 Fibonacci extension level. So, but as the price starts changing direction here and going up, do not forget there is a resistance here. We're going to discuss that in the next part of the video, talking about the flat correction, the different type of the flat correction, why we see that. So stock that are, okay, mildly bullish can go above the multi-way, bringing the price to 138%. People will think that that's it. A new cycle has begun. The breakout trader will get very, very excited, crazy breakout traders. I hate these traders. By the way, they can trade like that, but sometimes they annoy you, all right? They can't be patient. They are like, I don't know, well, are they on drug? Well, they are not. Okay, make fun of them a bit, that's all. So, price will go all the way up to this level, a bit, 138%. As I told you already, for the running flat correction, the price will not go below the low of the A corrective wave. But for the expanded correction, the price will come all the way to the starting point of, okay, the multi-wave. Here, what I told, okay, some TSCWSY S008 traders, this is what we call a cycle point. This point here is a cycle point. Price turn around, okay, 180 degree, that's a cycle point. Price turn around minus 180 degree, that's a cycle point. I don't want to dwell on that. Let's move on. So, the first scenario, remember, traders want to buy here, but do not force it. If the balance sheet is strong, if the company is making money, price can go to 138%. That's the first target. But do not forget this resistance here. There's a resistance here. All right? And the price may go all the way here. As it hit this level, if the momentum has stalled, if the price has exceeded its fair value too much, which means it's overbought, 5 times the fair value, 5 times the next asset price, the macroeconomic conditions deteriorating, okay, things are not looking good for the company, they are coming under pressure, they are not making enough money like before, they come in with a lot of warning to the market. That's it. They start selling, all right. As they are selling, there's a support here, which is the lowest point of the A corrective wave. Watch it, all right. Sometimes the price will come, will not go below it, but will display instead double bottom here. And then boom, up again. So watch all the levels. Sometimes if the economic conditions are not very good, the price will retrace 100%, come from here all the way down here. That's what we call an expanded flat correction. This section from here to here, that's what we call a C corrective wave, which is divided in 5 ways down. 1, 2, 3, 4, 5. Big time. Sometimes you see it come down fast. And a lot of bulls, a lot of breakout traders that were piling in here, thinking that I told you, and that's it. It just come down big time. And people are This is a shocking wave. The C currency wave is not very friendly, and traders need to be aware of it. To avoid that the video is too long, I invite you to follow me in the next part of the video talking about wave trading education part 5, when we will continue with this discussion, okay, about wave trading education. Until the next time, enjoy yourself and be very happy. This is about wave trading education, part 4. See you in the next video. We are the TSTWSYS008 traders. Speak to you soon.